Hello and welcome to this video. Have you ever thought about helping a homeowner or a landlord sell their house, or simply wondering how you could get your house sold very quickly? I have been asked recently, what is an assisted sale and how does it work? In this video, I am going to share what is assisted sale, its components, advantages and disadvantages, and most importantly, who is it for? Before I continue, if you like this video or any of my videos, hit the like button below and subscribe to my YouTube channel for more of these videos. Let's get to it. Now, what is assisted sale? Assisted sale is where an investor helps a homeowner, landlord or motivated seller to sell their house quickly. In some occasions, seller gets a guarantee price for their house. The seller receives an immediate cash payment of the equity in their house or a profit share from the ultimate onward sale of the property. Meanwhile, you, the investor, take over full responsibility of the house, mortgage payment with the permission of the vendor's lender until the house is sold. So basically, that's what an assisted sale is. Now we know what assisted sale is. Let's now talk about how it works, what it is, how can you actually use it as an advantage to help you as well as the landlord or the seller. There are a few options we could choose to help motivated seller sell their houses. Number one, an assisted sales using lease option agreement. Number two, assisted sale advance cash. And number three, assisted sale no advance cash, except maybe paying £1 option fees or something like that. Let's get to looking at this in more detail so we can go through all three of the options you could explore to work with your sellers or your vendor or your motivated seller to help them sell that property if they're either struggling to sell it or they want a quick money for their property for them to move on into something else. So let's go back to an assisted sale using lease option agreement, right? It's when an investor offers to buy a house at today's price between now to say sometime in the future. From immediate effect, the investor take over the mortgage payment and complete responsibility of that property. So this future price is what is also known as strike price. This is the price you've agreed to buy the property, say 2-3 years down the line or whatever time period you've agreed on. That's the things to note here is the option fee or the upfront cash advance you need to pay before the actual lease option goes ahead. And this will depend how much equity the seller has in their property. The minimum option fee for a lease option could be anywhere, as I said, from £1 onwards. So what are the advantages of having a assisted sale on a lease option agreement for both investor and landlord? Number one, for the landlord or the owner of the property, the mortgage payment has been taken care of, because as you, the investor, will be paying the mortgage on behalf of the owner. Number two, again, the owner do not need to worry about repair and maintenance. And there's a speed, you know this person will buy your property. And you've got a guaranteed rental income, because if the investor take on the property, if you were renting it, you will be receiving rent. Also, you don't need to worry about utility bills as well as council tax, as this has been taken care of by the investor. And also, in some occasions, the investor pay for your insurance as well. If you have to pay insurance, the investor would be paying for it. Again, let's look at the disadvantage. Number one, homeowners still have the ultimate responsibility to pay the mortgage if the deal did not go through. Number two, the homeowner would need a consent from the mortgage lender to allow the investor to pay the mortgage on their behalf. Number three, investor may not buy the property at the end of the option. But guess what? The investor would have left the property in a higher value, because what the investor would have done, they would have done TLC or done a refurbishment in the property. They may have painted and decorated. In some occasion, they may have even had extension in that property. Plus the cash flow, they would have paid you, the landlord, during that period. And obviously you've got the capital appreciation along that side. So technically it's not a disadvantage for even if they walk away, because they've left you with a better property, and also with a property that would have accumulated in price. Number two, assisted sale with advance cash. This method is similar to lease option agreements. The main difference is that the time scale of when the final transaction takes place. With assisted cash sales, the transaction happens a lot quicker. The investor takes over again full responsibility for selling the house, like he would have in lease option. Homeowner receive an amount of advance cash. This advance cash is usually based on agreed valuation of your property less the mortgage balance. However, unlike lease option, homeowner will not be getting offer in excess of what their house is worth. During the time between the homeowner receives the cash advance and the investor sells the house, the investor will take over again full responsibility of the mortgage payment and full responsibility of the property. When the investor sells the house, the profit will be used to repay the existing mortgage on the property, and the sale will be completed immediately then. Assisted sale is usually suitable in a situation where the property requires refurbishment, upgrade, or simple refurb, and homeowner either don't want to deal with it or do not have money to actually do the refurbishment work or to add value to the property. So in that occasions, the investor will inject the money to get the property upgraded and sell it at a higher price. Again, it depends what you've agreed on. You could agree on selling on the property for a profit share, less whatever expenses you've incurred as the investor, as well as less what the property would have sold for in the market at that condition. Advantages of cash option. Number one, refurbishment costs. Repairs and maintenance is taken care of by the investor. So you, the homeowner, do not really need to worry about paying for the refurbishment work. Again, there is a speed of sale there. You get the majority of your equity fast, because what would have happened, the investor would have valued the property and then pay you the equity whilst he get the work done to add value to the property. Number three, again, you don't have to worry about paying the mortgage, as the investor will be paying the mortgage on your behalf. Insurance costs is usually covered by the investor, as well as council tax and utility bills once it's taken over the property. And in this way also, mortgage is paid off quickly, usually within 6 to 8 weeks from the start of the contract to when the property is sold, especially when they've added value to the property and the property has been modernized and it looks really, really nice. It will sell very, very quickly. That way you'll pay your existing mortgage, you get your equity, and then you move on to something else. The disadvantages, however, are, again, you need a consent from the lender to allow you to do such agreement, and you're still ultimately responsible to pay the mortgage if the investor failed to pay it. And you may incur extra stamp duty cost, but the 3% stamp duty is reclaimable if homeowner sold the property and buy another property within 2 years of the actual transaction. This is a simple matter of just completing a form to reclaim your stamp duty. Number three, assisted sale, no cash advance, meaning you don't have to put any money up front. Whilst I call this an assisted sale with no cash advance, this is strictly not the case, as already mentioned. And like lease option agreement, the main contract behind an assisted sale is an option contract. This means that a minimum option fee is payable. It could be anywhere, again, from £1 to whatever amount you've agreed for the contract to be legally binding. So you have to be paying option fees for it to be binding. It is usually better if the owner or the seller has already pay off their mortgage. But it also works even if the homeowner have not paid their mortgage. It's better if the homeowner has paid off all their mortgage and they haven't got any outstanding mortgage to pay. And again, usually no stamp duty to factor, because the homeowner will put their house up and the investor will be responsible to do the repairs, upgrading the property, modernizing or creating an extension to add value. And also, again, the investor would have taken full responsibility of the property. but the property doesn't officially change ownership at this point. This is the reason why you don't get charged any stamp duty during that time, because there will be work going on the property and you don't really effectively have any money coming to you as a result of structuring this sort of deal. However, just to be clear, there will be a stamp duty added to the ultimate sale, i.e. the person who's going to be buying that property in the future, we would adjust the stamp duty you would have paid to compensate that cost, so you don't actually incur that cost. Another advantage of joint venturing with homeowner on a basis of an assisted sale is so that you can share the profit in the ultimate sale of the house. And also, if you don't have enough money to actually buy a house and refurbish, you can work with a homeowner, landlord, who is looking to sell but do not have money to actually do the works. So they've got the property, you've got the money to do the works. In that way, you could actually work together in a profit share. You can negotiate that profit share as well. Sometimes anywhere between 10 to 50%, whatever you've agreed on, you could structure that deal to ensure there is a win-win resolution for both parties that are coming together to sell the property. And how the profit is normally determined. The property is the difference between the property's current market value at the date the deal was secured and the sale price, less the cost of refurbishment and the buy and sell cost. And whatever is left over would be the profit, and you negotiate on that basis to have your own profit share. What are the disadvantages of an assisted sale with no cash advance? Well, number one, you need to wait for the cash. This is because there will be a slight delay in getting your property sold, as you will have to wait for the work to be completed or refurbishment work to be done in order for us to achieve that amount we want to sell the property. Again, if you're getting a better return, it's better to wait to get the property updated so you can sell at a higher price, so you can make a bit more money out of it. Number three, you may be charged extra 3% stamp duty, but homeowner will get to reclaim the stamp duty if they buy another house within 2 years. Again, it's not really a disadvantage. If they're aiming to buy a property either to downgrade or upgrade, whatever it is, as long as they've done it within the 2 years, they will be able to reclaim that money back that they've already paid in stamp duty. Let's look at the advantage, because this is an absolutely good idea where landlords has a house, hasn't got money to pay to do any work, and you've got tiny bit of money but you haven't got enough money to buy a house. So the advantage is more cash for the property due to the renovation, because you're adding value. So it's better for the homeowner to wait that little period to add value to that property so you can sell it at a higher price, so you can both make money out of it. Number two, you will have an experienced investor to work with as a landlord or as a homeowner, because he would have done it thousands of times and it would be an easy thing for him to do again. You don't need to worry about the utilities and council tax, because it's all been taken care of by the investor himself. And the investor also, as I said, pays for the refurbishment, so you don't have to put anything up front apart from the house. And again, that also helps you concentrate in doing something. As if you've got other business adventures as a homeowner, you could concentrate on that, and you've got this investor looking after the property. And then obviously, if you need help structuring this sort of agreement, do not hesitate to contact us. We will be happy to help and work with you to foster a win-win resolution. I really hope this session has been helpful to you. If you like this video or any of my videos, don't forget to hit the like button below and subscribe to my YouTube channel for more of this video. Thank you so much for listening. I look forward to sharing the next video.